The current trading environment for AST SpaceMobile Inc., trading under the ticker ASTS, shows the stock at $78.05 USD, reflecting a decline of 7.62 USD, or roughly 8.89% during today's intraday session. While a nearly 9% drop might suggest a fundamental breakdown to the casual observer, the reality under the surface is far more nuanced, especially given that we are currently in the middle of a holiday-shortened trading week on December 25, 2025. This specific movement comes immediately after one of the most significant technical milestones in the company's history. Just hours ago, AST SpaceMobile successfully launched BlueBird 6, their first next-generation satellite, from the Satish Dhawan Space Center in India. The sell the news reaction we're seeing today is a classic example of market psychology, where the anticipation of a successful launch was already priced into the recent run-up, leading to profit-taking the moment the satellite reached orbit. However, what most people are missing is the sheer scale of BlueBird 6 compared to the previous Block 1 satellites. This single satellite is 3 times larger and carries 10 times the capacity of its predecessors. While the stock price is bleeding in the short term, the operational reality has just shifted from a proof-of-concept phase into a legitimate industrial scale-up. Investors often look at a 9% drop and panic, but for those following the story closely, this is a volatility profile they've grown accustomed to. The expectation was that a successful launch would send the stock to new all-time highs instantly. The reality is that institutional players often use these binary events to de-risk their positions, especially when the stock has already seen a massive appreciation over the last few months. If you look at the volume today, it's remarkably high for a holiday period, suggesting that while retail investors might be hesitant, there is significant positioning happening among larger funds. The gap between what the market thinks, that this is just another speculative space play, and what the data shows, that they now have the largest commercial communications array ever deployed in low Earth orbit, is where the real opportunity usually hides. When we talk about the broader ecosystem of online investing and self-investing, ASTS has become a focal point for those using platforms like the Robinhood app or the Fidelity mobile app. It's a retail favorite, but the institutional interest is quietly catching up. Firms like Google and AT&T have already put skin in the game, and as the company moves toward its goal of 45 to 60 satellites by the end of 2026, the reliance on speculative momentum will likely give way to traditional valuation metrics based on subscriber revenue. For anyone managing their own individual brokerage account, the challenge with a stock like this is staying grounded when the headlines are flying. It's easy to get caught up in the hype of a launch, but the real work happens in the months following, as that satellite is unfolded and integrated into the global network. The movement we're seeing today is also tied to the broader macroeconomic environment. As we sit here in late 2025, the pressure on high-beta growth stocks remains intense. While AST SpaceMobile is no longer just a pre-revenue startup, it still consumes a massive amount of capital to get these birds into the sky. Every time they announce a launch, they are also reminding the market of the high cost of doing business in space. This creates a push-pull effect where the technical success is weighed against the burn rate. For those looking for investment help or using services like Schwab Intelligent Portfolios, the volatility of ASTS often makes it a difficult fit for a conservative portfolio, yet it remains one of the few pure-play options for anyone wanting exposure to the direct-to-sell market. Let's talk about the institutional activity for a moment, because that's often the best indicator of where the floor might be. Recently, we saw a significant stake reduction from a major shareholder, which created a bit of a supply shock in the market. When millions of shares hit the tape at once, it doesn't matter how good the technology is, the price is going to move down. This liquidity break is what we are likely still feeling the tail end of today. But if you look at the 13F filings on the Interactive Brokers platform or through Fidelity Wealth Management reports, you'll see that for every large seller, there are dozens of smaller institutions slowly accumulating. They aren't buying for the launch, they are buying for the commercial service that follows. Comment below how many shares of AST SpaceMobile you currently hold and what your average cost basis is. I'm curious to see who caught the early wave and who is just getting started. To understand why today's $78.05 price point matters, you have to look at what AST SpaceMobile actually does. They aren't just another satellite company like Starlink that requires a special dish. Their entire business model is built on the idea that your existing unmodified smartphone can talk directly to a satellite. They're essentially building cell towers in space. This is a massive technical hurdle because the signal from a standard phone is incredibly weak. To catch that signal, ASTS has to build massive antennas. BlueBird 6, which just launched, is nearly 2,400 square feet. To put that in perspective, that's the size of a large suburban home floating 300 miles above your head. The company has spent years proving this works. Back in 2023, they made the first ever space-based voice call using a standard Samsung Galaxy and an iPhone. They've since moved on to 5G streaming and video calls. The technology is no longer the question, the scale is. They have partnerships with over 50 mobile network operators, including giants like Verizon, AT&T, and Vodafone. These companies collectively have billions of subscribers. From a business perspective, ASTS doesn't need to acquire customers. They just need to provide the coverage, and the carriers will do the rest. This is why the stock has such a high ceiling, but also why the floor feels so far away when things get volatile. Historically, ASTS has been a story of delays and breakthroughs. They've missed deadlines in the past, which is common in the space industry, but they've always eventually delivered. The launch of the first 5 satellites in late 2024 was the first major turning point, taking the stock from the single digits into the 30s and 40s. Now, with BlueBird 6 in orbit, they're entering the Block-2 phase. These satellites are the real horsepower. They are designed to provide the bandwidth needed for actual commercial use, not just testing. If they can stick to their schedule of launching 1 to 3 satellites each month starting in 2026, the revenue story becomes very real, very fast. Looking forward, the scenarios for ASTS are quite binary. On one hand, you have the path to a global monopoly on direct-to-cell broadband. If they can get 40 to 60 satellites up, they can provide continuous coverage across the United States and other key markets. At that point, the stock isn't being traded as a speculative tech play. It's being valued like a utility or a major telecom provider. On the other hand, the risks are literally atmospheric. A single launch failure or collision in orbit could set the timeline back by years and crater the stock price. There's also the competitive threat from SpaceX's Starlink, which is also working on direct-to-cell technology. However, ASTS holds a significant advantage in the form of its massive phased array antennas and its deep portfolio of over 3,800 patents. The expectation versus reality dynamic is what will drive the stock in the coming months. The market currently expects a flawless rollout of the remaining Block 2 satellites. Any deviation from that plan will be punished severely, but the reality is that they have already solved the hardest part of the equation, the physics. They've proven that the signal can reach the ground and that the capacity is there. As they move into 2026, the focus will shift from can they do it to how fast can they do it. For investors using the Robinhood app or SoFi Invest, the temptation to trade the daily swings is high, but the institutional smart money is focused on the long-term infrastructure. As we wrap up today's analysis, it's clear that the intraday drop to $78.05 is a reaction to the successful launch of BlueBird 6, driven by a combination of profit-taking and holiday liquidity issues. While the 8.89% decline looks ugly on a chart, it happens against a backdrop of massive operational success. We've seen how the market narrative often lags behind the engineering reality. The expectation was a post-launch pump. The reality was a liquidity event. But for those who understand the business model, the partnerships with AT&T and Verizon, the massive IP moat, and the transition to high-capacity satellites, the long-term thesis remains unchanged. In summary, AST SpaceMobile is moving from a story of if to a story of when. The launch of BlueBird 6 is the first step in a much larger deployment that aims to bridge the connectivity gap for billions of people. While the stock will undoubtedly remain a roller coaster, the underlying value of a global cellular network in space is hard to ignore. Whether you are using Fidelity brokerage services or Interactive Brokers for your trades, the key with ASTS is managing your position size to survive the volatility while keeping an eye on the launch manifest. The path to 2026 is paved with both risk and opportunity, but as of today, another major piece of that puzzle is officially in orbit. Disclaimer: this analysis is for informational and educational purposes only and does not constitute financial, investment, or legal advice. Investing in stocks, especially high-growth sectors like space technology, involves significant risk. Always conduct your own research or consult with a licensed financial advisor before making any investment decisions.